Welcome back. You're watching the commodity trade here. Now let's talk about commodities with our guest today, Vijay Bhambwani, and the author and CEO of bsblindia.com. He joins us now live in the studio. Mr. Bhambwani, the last time we were talking, it was on aluminium again. I remember we were talking about where you were saying that the prices again have crossed the two standard deviations again. You were talking about prices again have crashed since then. And it appears it was not a small crash, it was almost a vertical crash, almost similar the way again the prices shot up here. So now, how's the trade looking like? And I started with aluminium again because that was the story of the last 1 month here. So how's it looking like?
Afternoon, Piyush. Thank you for having me on your show. I'm pleased as a punch. What we talked about on our 20th April interview has now finally come about and proven my hypothesis wrong. Proven my hypothesis right. I stand corrected. In the history of metal prices, wherever you get data from international commodity exchanges, when you look back in time and see when prices of metals have gone into two standard deviations or more, and if they have they really sustained? So it was actually a no-brainer for program traders, for mathematical model traders, that these prices, both on aluminium and nickel, were unsustainable. What we talked about was a support close to 140, 145 levels on aluminium, because that is where the majority of traders got trapped on the short side and they got surprised. So I said, since this was the starting point of the rally, this is where support is likely to come. And so far, so good. The markets are respecting that sentiment, and I think volatility is by far from over. These are volatility clusters that metal traders will have to brace themselves up for, fasten their seatbelts in the entire calendar year 2018.
So again, the question again, Vijay, would be that now what basically should be the outlook here in terms of price outlook for base metals in particular? We started with aluminium again, but broadly again talking about copper, zinc. If I basically ignore the aluminium and nickel story here, and if I just look at the screen for zinc here, the last 1 month again almost sideways movement. In fact, last 2 months again, since the time it has started correction from $3,500 again. So how is it looking to you? Because on one side, you actually are seeing sort of higher sort of dollar here, higher crude here, base metals again, these sort of sharp fluctuations. Is there any sort of major danger in terms of some large corrections, or you would largely think that perhaps prices actually have stabilized, they're going to move sideways now?
Piyush, for market traders, especially the big guns, to make money, they need volatility, and volatility comes when some stories are created. I have a feeling the net outlook for 2018 is sideways with a slightly positive bias. But what you saw as Rasal and possible sanctions on nickel being stories or triggers for prices to go up only to collapse again, will by rotation happen on other metals also, because the market needs stories to go up or go down as valid triggers. Now, whether these stories are justified or unjustified, that of course remains a question of conjecture. But throughout 2018, I think one after the other, metal after metal will see these kind of pressure points being created.
Right. And what's your view, Mr. Bhambwani, on the oil prices again here? I'm just shifting also to oil prices, and we'll actually keep on talking about all the commodities in almost a circular way, primarily because the prices actually have become slightly correlated. Oil prices, again, they have dipped slightly. Now, in a normal sort of market scenario, a couple of months back, if there was a data that, yes, US rig count has increased materially, consecutive increase in the data again, data after data here, that would have acted as a negative trigger for the oil price here. But again, the rig count increase, and then now again, basically we have been talking about Iran sanctions sort of risk here. So around 73, 74 Brent, how's the trade looking to you?
Piyush, I've often maintained since the last few quarters on your channel that crude oil prices will continue to rise primarily for one single reason, that Saudi Aramco's IPO is still in the pipeline. So the Saudis, in order to get higher valuations, will try heaven and hell to push crude prices higher. Fundamentally speaking, there is no story in crude oil to go up to the levels where they are, but they will continue to rise, albeit the rally will be 2 steps upwards, 1 step downwards. So you might just say a 3 to 5% decline in crude oil prices, and the next up move will take it up to another 7 or 8% up. So net it will be a 2 to 3% gain. So don't be surprised if crude oil prices were to retrace by say $3, $4 or even $5 before they rally again.
Right. In fact, a food for thought for our viewers, again, US crude production actually has increased by more than 25% since mid-2016 again. So that's the level of production. Again, both US and Russia are almost now producing 10 to 11 million barrels per day. So again, that's how the production has increased, and the oil prices definitely actually are rewarding both the countries here. So Mr. Bhambwani, again, for a trader, now again, if they are creating positions here, out of all, whether it's base metals, oil prices, precious metals we have not talked about, but let's include that also here. Where is right now actually a highest margin of safety, or at least adequate margin of safety in terms of durable sort of trend, and what position actually can they take here?
Well, in a market which is being moved around by stories being created, margin of safety always tends to be low. This is something that we teach all our students in training seminars and mentoring kind of seminars, that margin of safety in a market which is story-based is always low. Now, relatively speaking, where is the place to hide? Ironically, I think buying crude on decline seems to be the least risky, because you have Saudi Arabia, you have Russia, you have Iran, and you have a whole lot of OPEC nations being vested interest parties in wanting crude prices to go up. The Americans have turned net exporters in 2018. So whether one likes it or not, they stand to gain from higher crude oil prices for dollar revenues. So relatively, I would still bet my money on crude oil prices, but on declines.
Right, and Mr. Bhambwani, for all the traders again who are highly fond of gold, to an extent silver here, what's your advice here? Because in dollar terms, I don't see a range actually getting broken either way here. $1,300 again remains quite sticky till the time we don't see a major correction here. M6 gold perhaps could be a different story because of dollar increase here. But what's a wise strategy right now? Is it a good time to go to initiate long on M6 gold here, and perhaps stay bullish because dollar is on your side here, and the gold in international markets remains range bound here? So what's a good idea here?
Well, gold and oil prices tend to move in opposite directions. So if we are expecting a 3 to 5% decline in crude oil prices, chances are gold also might see some kind of a breather, barring the US dollar kind of a factor, which you rightly pointed out on the MCX. Now, if gold was to crack past the 1,320 levels on the COMEX, I think that would be a clear indication for the bulls that the range breakout is probably likely to occur. Let's not forget that these volatility clusters like false breakouts, etc., what you saw in aluminium and nickel, can also occur in gold. But net, up to Diwali 2018, I would say precious metals are a good bet to bet on the long side. Although in silver, like we talked about last time, buy and hold in derivatives in the futures on the MCX doesn't seem to be a good idea, for the sheer reason that cost of carry is in multiples of the bank FD interest rate that you receive. So probably you should be looking at deliveries in silver and ETFs in gold.
Well, that's the word of wisdom coming on gold and silver here. Gold perhaps again $13, $20. If you're looking at the international markets for making strategy on MCS gold, that's the level again you should be watching out here. Mr. Bhambwani, thanks for all the insights into oil, where again you actually are a bull right now. Gold and the base metals there. Base metals, again, the fluctuations, they seem to be actually continuing here. So again, brace for some volatility and also the sideways move we have been seeing in the base metals here. That was all we had on this edition of Commodity Trade here, but stay tuned because news and updates, they are going to continue on the other side of a very short break. From the entire team here, thank you so much for watching us.